Okay, so the recording is on. So I was talking about the support and resistance and what we should do. So identifying it and then taking action when we see it's happening what we anticipated. So it's better to wait for the next day and make sure that what we anticipate is happening. So I'll talk to you, I'll explain to you a little bit on the on when I'm showing you the chart. I'll show you maybe more than a little bit, and then the market. So so you can line up your your candidate, but just don't buy it just because it's cheaper. The trader make a mistake if they buy an option for $2 and it's trading at 20 cents, then they say, okay, how low can it go? Uh, I bought at $2, now it's trading at 20 cents, so I might as well pile up, and they get it right. Bought two contracts at $2, but then bought 100 contracts at 20 cents, and they get lucky and it moves up, make fortune, or they not lucky and the whole position is zero. So in option, the whole position can go zero, but systematically you can average down. So systematically here, there, uh, pick up a few contracts here at this support, pick up at some at this pullback, and build your position. In option trading, so this is another question people ask. In option trading, actually in option trading, you shouldn't have any stops, and you should have enough time for the position to work out and enough conviction in that position. If the stock is doing something extraordinary, then you know that okay, this my thesis is wrong. Your original reason is wrong. Otherwise, in option, uh, my belief. So I'm talking about my belief. This is my belief. You can have your own belief. Some traders have a belief that they put 20% stop in the option and they get stopped out every day. So they get stopped out every day because they put 20% stop. Unless you're very precise, your system is such that you get the result right away. You enter the position and you are you know the result that okay, this is not going to work, so 20% loss or 30% stop is good enough for me. But maybe you do that, but I don't, because when you're trading, I'll show you the chart. When you're trading stocks, and stock you're trading, um, you have some reason, either fundamental reason or technical reason. So if you're trading fundamentally, the fundamentals don't change. By the time you come to know the fundamentals has changed, your option is trading at zero. So you're trading options based on technicals, or you're trading longer dated options based on fundamentals, or you combining fundamentals with the technical. So you're a rational trader. So if you're trading options based on the stock, then technically it should tell you that this position is no longer valid. Either the volume, the sell volume, if your position long. So either your sell volume, you can read the sell volume is too high and the stock has crossed. Even if the sell volume is high, the stock can stop right at the level where the other guys think is fair value for them and they go and buy it. So honestly, in option, you shouldn't be putting any stop and let the position work out. So it's just that the win rate should be the win rate, it should be 70-80%, and the gains. So if the 70-80% gains or 80% win rate, and then your gains are high, so 80%, 90%, 100% gain. So a few big losses, like you lost everything in that position, the others are making up. So you can read about the stops everywhere. People say honor your stop, but I don't think in option. Option is when you open a position, you allocate the dollar in such a way that you know that even if you lose 100%, it will not make much difference, because it could be a 2% of your portfolio. When you lose 100%, you're losing, let's say, 2% of your portfolio, or 1.5% of your portfolio, not 30% of your portfolio. So that's what the stop and nibble here or there based on technical. So today I'll show you some more charts I will show you the original thesis when I send the alert or send the chart, members or non-members. And then I'll show you what happened. So along on the left side are the original comment. I'm not saying every stock just go and hit the target and we make money, but as long as your betting average is favorable and the gains are coming in. And then there are various ways of doing it. If you identify a position which is supposed to be long, you don't have to buy calls. You can sell puts or you can create a spread. So you can buy shares so there is no time decay. So it depends on the portfolio size and what you're doing. So I have members who do all kinds of things. They just need to know the targets and they know the direction. And then I'm sending the alert. And then they leave it. They say, okay, we will take care of our strategy. So they deploy various strategies. So I'll show you a few charts. So here is ANF chart. So ANF, I identified ANF on August 8th, and maybe along with ANF, the other retailers were going up. Maybe XRT, the ETF, retail ETF, I identified that is bouncing from support. So whatever could be the reason. And then I said, okay, I saw any ANF moving. So ANF, this is the entry point shown from the on the blue arrow. So these are the comments. ANF is not a large cap stock, and it dropped. So it dropped from 50 levels here. I saw 50 levels to let's say $15. So continuous buying in ANF. The volume was also nice, and it was breaking the consolidation. So recent stall. So these little candles telling the story. So sometimes the little candles tell you the story more clearly than the big candles. The big candles, they are out there showing you what has happened big, but reading the small candles could tell you what is about to happen. So these back to back, and then these back to back hammers, and the support is right here. The identified ANF. So position ANF via calls, the volume is huge. So what I said, yeah. Okay, so another thing, when you have, so this is my belief and this is my reason. When you have a gap, so here's the gap. So this, so what happened here? Look on the left side. This is the support level. This is, and why I say support level? Well, it gapped down and it dropped here at 27 level, and then it bounced, moved up, filled the gap, and then dropped back. So dropped all the way to the previous support. So when it does that, naturally, there are buyers. Again, the buyers, those who missed the move right here, they are the buyers here. So it's just sitting there. This is not a buy signal. So this is where the traders make the assumption. Okay, I see it's pullback and it's a support, so I'm gonna average down, load up the truck, and then next day they see this down move. So the truck is like clobbered, got total. So you identify this move, you just assume that this ANF I will watch and see what happened next. If I see it's trading somewhere in this zone, 28, 29, 30, then I know this is the support. So I can put the stop right here. But if you buy here and you have a stop in option, there is no stop. Your option is trading at zero. When if you buy here, especially 2 weeks in option and strike, let's say you say, okay, I always buy cheap option because cheap option double and triple. So I pay only 50 cents. I don't pay more than $1. So you pay 50 cents. So that's one of the traders believe. I pay only short. I buy only short-term options. I buy out of the money. So about 30, 35 strike. 2 weeks left, and then next they see the gap down, and the option is zero. So don't do that. So this is just on the watch list. Now it gap down. So if it gap down, I don't know where is the so it tried. So it rallied. It looks like to this looks like buy signal, but then it pulled and it dropped to 15, and now it's consolidating and making a hammer. Now we have some it's not 100%, but we have some level of support right here. So if you position your entry, this is your this will be your stop. So whatever option is trading, so if the stock breaks this low, whatever is the option price at that time, you are stopped out. If you bought a $4 option and you put $2 stop, maybe the $2 stop hits when the support level in the stock reaches. So when the support level in the stock is reaches, your stop option is hit, and then you're out, and then you wonder what happened, why I get stopped out right at the time when the stock, when my option position moved up. So 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 put the stop. If you want to put the stop, put it based on the technicals of the chart, which is A and F. You're not trading options. You're trading options, but you're not reading options. Maybe you read implied volatility and the option. Maybe you have a system in figuring it out, like they say on CNBC. What they say, huge volume interest and paper money and papers, whatever, those two brothers. So just look at the history when they say this much volume is here and I'm buying this much. Just track and then see the results, what happens. So here's the entry. And then, okay, so the entry was here. Next day I see a red candle. So my position is in red. So it's okay. And then it moved up. So the stock is moving up towards the gap, where the gap, where the gap started to, when the stock moved up to fill the gap and then it pulled back. So I have a clear cut resistance level, which is 22, 20, 25. So those who bought here, they are all making money. So they will naturally sell at this level, at 22.50 level. So that's my target. So if I enter at 17, 18, 22 is target. If the stock wants to move up, first it needs to conquer this 22.50 levels and sit there for a while. Maybe test it, it pull back, and then it will start this journey. So there is like another journey the stock will take and may not take. So exit, if you're trading option, you exit right here. So exited right here, made 41% gain. Now we will see what it does. If it conquers 22.50, then your next level is this, because this is where all the sellers are sitting, because they were buyers. So they were buyers here. Maybe there are some buyers from here. They are sitting right here. So they will be liquidating their stock position. So if you have option, you should be liquidating your option based on the technicals, not based on some your predetermined profit objective. That okay, I have an objective of making 450%, and because you put 50% objective and you set the target, and maybe the option was trading at 48.5% gain, and you never got filled because your objective was 50%, and the stock is saying no, your objective is wrong. I'm going to do what I'm going to do. So this is a resistance level, and it can fill the gap, who knows, but it pulled back. After hitting it, pulled back. So this is ANF. Resistance is known, this level. Now here's the BTU chart. So I send BTU. So another thing, stop trading is a game. So just like many other games, the casino game, the law game, the lawyer's game, the judge's game, and too many other games people have created to make themselves rich or wealthy or happy. So there are many games. So stock trading is a game also, and you play by the rules of the big boys. So it's a game played by the big boys. So here is the candle of BTU, which is reversal, and it's called gravestone doji. So it's uh, meaning that all the buyers who bought trapped. So the day, so imagine a candle. This was a white candle, big white candle. People were buying it, but then it hit this resistance level at 24, 25, and it pulled back. So when it pulls back during the day, the same day, all the longs are trapped. So when all the longs are trapped, other longs are also seeing it. So these guys, they are seeing it. These longs are trapped, but they have not taken the decision to get out. So the next day is the day where it will tell you what's the next step. So maybe it gaps down next day. Who knows? After making this reversal and creating a grave for all the bulls, maybe it gaps down and go to who knows where. So there's another. So there's another side of the game. So we always ask what the other guys are thinking. I'm thinking this, that it will crash. What the other guys are thinking. So other guys maybe this may be the pullback, and we don't know the reason for the pullback. Is it related to this Peabody energy industry, or is it related to overall market? What's the reason for market for this to pull back? So I position myself uh, on BTU long, so it pulled back to the height of the previous white candle. So it pulled back to the height of the previous white candle. I positioned myself to go long, expecting this area is the resistance, 30 is the resistance, and then it moved up, and I believe we are still holding it. I don't know, I did not put the gain. So entered here at 24 and 26, so I've not put the gains. Maybe we are holding it. So we scale out in 2-3 stages. I send the alert in 2-3 stage, 2-3 different alerts: sell 1/3, sell half, sell majority, sell all, sell rest. So it depends how many contracts you have. So when the targets are hitting, I'm sending you the alert to, so it depends how many contracts you have. So maybe if this position may be open, half of the position is open. So that's why I don't have the gains. So let me go back. So here the BTU is you create the path, um, anticipate what it will do, position, and this is what happened. So the next step is for BTU to cross 2830 level, and then this is the ultimate resistance. But I think this may not be this may not be the strong resistance. The resistance is right here. The resistance is right here at 30 level. So we'll see what it does at 32, 30 level. So I send the chart, and I also send the alert. This is Hershey. So this Hershey did this on the day of August 15. You see it moved up, crossed the resistance level here, and then pulled back. So pull back. So it poked its nose to break the resistance, but it failed. So breaking the resistance is not to the penny. Breaking the resistance is some offset, some level of the resistance. So what that level could be, it could be the average true range and then multiply by some factors, percentage, 25, 30%. And then you say, okay, this is a clear break of the resistance. So if this is the resistance, this is not broken. This resistance is not broken, especially if it's attempting the first time. So there are some leftover sellers. So there are a lot of sellers here. So they may be sold out, break even. Because if you bought it here at this level and you saw, oh, this big, I don't know what some news earning or something happened. You see it got clobbered, and then it made a double bottom and then it rose. So those who are some who bought here, they are selling here to make money. Those who bought in this level, they are getting out at break even. So they may have averaged down somewhere here, and now they are break even. They are at break even, so they're liquidating their position. So when I saw this with this move volume, so when the volume is huge and it's a second or third time attempt and the break of the resistance with the white candle. So white candle with the breaking the resistance with the volume is like a large cannonball getting fired on the China wall. So if it's a China wall, if you throw the tennis ball, it will not break. But if you throw the cannon ball maybe one day the China wall will come down. So it's like this, another attempt. So there were attempts here, one attempt, two attempts, and the third attempt. This is the fourth attempt. So I count the attempts with one attempt, the second attempt, the red candle is the third attempt, the fourth attempt is the white candle. So the fourth attempt with the volume, maybe the cannonball is fired and it will break. So at position long, so it's anticipating the breakout. So there are various ways of breakout, breakout of the resistance, breakout from the uh, reversal. So many kinds of breakout. So this anticipated this breakout and it's there. So here is the cannonball fired and then the volume is still there. So now the break, the is I don't know. I didn't look at the weekly chart or monthly chart. So I'm anticipating. I'm based on this daily chart. Even if I see at the weekly chart now, it doesn't matter because this weekly chart, this day chart is on based on what I see here in December, and this is April, May. So all these sellers are gone. Now Hershey is in a new territory. I think it's in a new territory. So I have to look at the monthly and a weekly chart. But whatever it is, it broke out. So if you have you can play via debit spread. You can sell puts on this, sell puts, or you buy just buy long calls in the money. Let's say so in the money calls you can buy 225 strike. So the level where you expect the market, that market to pull back based on the support, that's the level you can go long with the with your strike, long strike. Sometimes you buy out of the money strike. So why you buy the out of the money strike? You buy out of the money strike based on the resistance level where you think the market will stop. But out of the money calls you're buying because you anticipate a quick move. So the quick move is coming, some event is occurring, but you expect that's the resistance level. And even though the stock will move quickly to the level, but that's the level. So if I anticipate, let's say 235 is the resistance, I don't see right now, but let's say 235 resistance and I expect a quick move. So instead of buying 225 calls, I'll buy 235 calls and get out at 235 when my strike comes at the money, because 235 is the resistance level and 235 strike is at the money. So I get the max premium and then I sell, because after that it can come pull back. But if you don't know it will move quickly or not, 225 strike is fine in the money. So 225 strike is selected based on many reasons. So one of the reasons is support level. It could be the spread was narrow, maybe the volume was there, maybe there is the open interest, and I have enough time of 40 days and more. So 40 days and more, 225 strike, give me 30-40% gain is good enough. So here's the HSY, and here's what it's looking, and I don't know what it will do tomorrow. Here's another one. So IBM. So whenever IBM announce earning, I think IBM, whenever the IBM, and I don't know about the last earning, but whenever it announces earning, it just goes down. So now when IBM is a blue chip, one time I was when I was in IT, I was given the assignment to go and do the analysis, some assignment on the IBM operating system and mini frame and compare it with the NCR and other. So IBM. So here is IBM. It gapped down. So after it gapped down, so when it gaps down, you don't know. So when the market gaps down and create so I'm just telling you one which I did not notice before. When the market gaps down and make a long wick, it tells you that the bottom is near. We don't know where the bottom is, but the bottom is near, because when it gapped down and suddenly rose above the 200-day moving average. So especially if the market gaps down and poke its nose below the 200-day moving average, and then it closed above the 200 moving average, and there is a long wick, and the long wick is right here, the same zone. So this is the first indication that the IBM wants to bottom. So that's what it's saying, that bottom, but we don't know. So what happened? So look at this red candle. Then the next, so it closed at right here at around 129. And then the next day, it created a wick, another wick, which is higher than the second wick. So another, there is another wick. So it's telling again, this is if you read the chart, it's telling you again, the IBM is about to bottom. We just don't know when, but it's telling you that it's about to bottom. So if you have bigger portfolio, you would start nibbling your calls. So in anticipation, it is about to bottom. So you can do that, but I don't do. I just wait for the confirmation, and the volume is big. So the second time, then the third time, another long wick created. So all this is something called mopping. So the big boys are mopping out all the weak hands, the short, the retail guys. They're mopping the retail guys. So the otherwise, or there's a short covering happening, because these wicks at the bottom is not happening from you and me. It's happening because of the big boys. So they are mopping us. So okay, go and pick up some millions of shares right here, price. I don't care. Just buy me 1 million shares. So somebody comes and buy 1 million shares. Somebody another 2 million, another 4 million. So they're buying it. So the way you position, if you know that this is the mopping process going on, and IBM is about to bottom, and I was late because my entry is here. I saw IBM here. So you to be safer. This is the first clue. The white candle comes with a higher wick. And to be safe, this is the zone above the 208, around 128. And then when it breaks and gap fill, this is another one when it's crossing 50-day moving average. So when I spot this, I said, okay, I still have some time to go and go long on IBM, although I'm supposed to get here. So the next resistance is around 140.41, and then the double top at 142, 142, 143. So position send this commentary to paying members, non-paying, and IBM went up. So the belief is that this was the mopping process. Gap fill, breakout above 50-day moving average. Here's the resistance. So now the IBM support. So IBM support is at 134, 135. So if you're not in the trade and you want to get in the trade, or you want to average down, you won't average down just on any basis. You would average down at 134 level, because 134, 135 is the support. I think it dropped back to 134, 135. So uh, and get out at 143, 144. So whatever gains you have at 143, 144 level, between 142, 144, you get out. You are not, you're trading the stock. You're using option to make money, but you're trading the stock. So if IBM goes to 134, maybe you can sell some puts and 130 strike, because here's another support. So you sell puts at 130, because you don't mind getting assigned at 130. So, and you collect a premium, and in the time DK will kill in, and you collect a premium. So this is another way of trading IBM. JDST. So JDST is moves against uh, the gold. So this is inverse ETF. So there are various ways of trading golds and silvers and mining, etc. So I spotted JDST right here. So this is, it moves 2 times faster, but it moves the other way around of the gold miners. So you can trade gold futures, you can buy gold stocks, you can buy gold miners. When you want to trade ETF long, you can buy the ETF, but this is an inverse ETF, JDST. So it means the gold prices are going down. So we position ourselves with this long, huge volume and the breakout. So I don't know what indicators you need other than applying some common sense and technical analysis, which I teach in my 1-year coaching. Other than that, I don't know what indicators you need. Maybe you can put another indicator on top of your knowledge, technical knowledge. You can put the indicator. Indicator will tell you to go long. So it's a double confirmation. So the volume is huge. It's breaking out. So the next step is JDST to reach 1516 level. And if it reaches 1516 level and it stays at this level and conquered, then the last resistance is this 16 plus. So 16 plus, and it goes up. So 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 this is the commentary I sent on August 17th, and this is what JDST is doing. So this is the for calls that sometimes we miss out big gains, and the reason is we sell in the resistance, and then the resistance is broken. So when the resistance is broken, it just goes. But you're playing by your rules. So if you follow the rules, you will be consistently. So this is the resistance level between 15 and 16, and this is if 1516 is crossed, then this resistance this will be crossed 1650. So just watch this. Keep holding JDST calls. So JDST 1650. So 1650. So there is a breakout at 1516 level, but at 1650 is the true breakout because this is where the pullback occurred and then it dropped. So anytime JDST cross 15 first and then 1650 is a true breakout. So JDST will go higher. Forward. JWN, this trade has not worked out yet. So I'm showing you something went wrong. The retail stocks are going down. So we have we traded many retail stocks, Target, I think Walmart, Macy, Bed Bath and Beyond. We made great money on BBY, and now we so eventually the music is stopped. So somewhere the music is stopped, and then you are left holding a position in that sector or in that group, which starts to give you pain. So this is JWN is a pain right now. So here, so this is what I said. JWN broke out into the resistance level. So I was expecting JWN to break this level 28, and then this is a big resistance 29. So it has not worked out yet, not yet. So entry here, and I was anticipating this double top breakout, and then this is the resistance because the retail were moving, but now the retail has hit the resistance. So entry here, and now it's sitting here at 24. So sitting at I think is slightly is around is somewhere here in between this zone, between the 50-day moving average and 200-day. So when two moving averages are close by underneath your position, so it's act like a double support. So when you see a support underneath the support, is not that bad when you have a support below the support. So it's like you are on a first floor and then you fell to basement 1, and then you know, okay, I have a basement 2, so it goes to basement 2. Unless the basement is 10-story deep, then you are in trouble. So basement 1 and then basement 2, you are on the ground floor on the first floor. So you say, okay, I was on the ground floor or the first floor, now I'm on a B2 level. It's okay as long as I don't go to B4, B5, I'll be fine. So somewhere here, if we see the turnaround, then we add more to the position. So right now, I don't know if I should add more, just because it hit to 200-day moving average. Maybe it goes to 50-day moving average. Maybe it goes down. Maybe it goes below 20. Then I'm putting good money after and the good money. So become a bad money, more bad. So I just wait. So this position is not working out. So M call. So M. So we made money in M. So here is the M, Macy, good old Macy. So here is the support, and it created a support. So it was not a support. I don't know if it was a support. I can read on the left side. So, but when it did this, it's a support. Another one here is another support. Now it's trying to break above. Maybe there were other retail stocks moving up. Maybe there was some good news in one of the retail making money. So Macy is moving up or something. I don't know the reason at that time why Macy was moving, but I see that it gapped up and it wants to conquer the resistance. So position myself, go long, I send this commentary and it did this. I don't know why I made 30% gain. It seems like I should have made more than the 30% gain. So entered here, next day it pulled back. So if you put your stop on this pullback on this red candle, then you stopped out, and then you see Macy gapping and gapping above. So gapping at the resistance, and I sold. So I'm not sure about this percentage gain. 30% should have been more. So I have to check. So here's the entry. I didn't get it stopped out. And I don't know if I will be stopped out here too, because this is the Macy can come down to this level, 16, 17, and it's still technically, it's still long. And I would still be holding it. But it did this. So Macy, 30%, I don't know. It should be more than 30% if enter, because it's quick move. Entered here. This is a 1 day, 2 day, 3, 4, 5, 6. So in a six days, the gain should be more than 30%, and unless I chose the wrong option or something, volatility I got sucked in. So anyway, so this is what Macy did. Now there's another one, NCLS, the cruise line. So cruise lines, they did this and they did horribly during COVID. Nobody was traveling, so it's a huge resistance. So it's not a good chart. Um, it's not a good chart for cruise line when it comes here at 17 level, and when it's trade at this level between 20 and 23 level. So this is a tremendous, full of resistance stock. So full of resistance. Lot of buyers, they are trapped, and it would be very hard for NCLS to cross. But when it crosses, it will cross, and we will know that it crossed. So I entered right here on the gap. So on the gap, because there was a news, 60% occupancy rate, and it's moving, but it hit the resistance. So it hit the resistance right here, and it actually moved up. So entry here and it moved up. I think I'm still holding, and we are still holding in NCLH calls. But right now, it's back to our entry price. So back to our entry price. So I'll see what it does next. So I'll send the alert. Another big resistance is right here. This is the zone in future we need to worry about. If you have a position and you're headed into this resistance between 19 and 23. So this whole area is tough, very tough. So if you hold it, and then this one, this is not as bad, this 16 to 17 level compared to 20 to 23 level, because the multiple tops. So you see one top, two top, three top, then it attempted, they sold, and then it attempted, then they sold. So as if too many buyers holding between 20 and 23, too many. So if you have a position stock, I don't know about the option position. If you have a stock and it's trading in the zone and you're in profit, you may want to exit. There's another one, OXY. So crude stocks are my favorite. I make money trading crude, mostly calls. So I have a basket of crude. So I don't trade every crude stock. So they're favorite ones. So if you make a list of 3-4 stocks in this industry group, 3-4 stocks from this, some industry group have more than 3-4, maybe the crude have 10, maybe tech have 50 stocks, retail there are 6-7, blockchain related 2-3. So something is moving. Financial, maybe 6-7 of them, the main one. So there is something moving and about to move in that sector. So So pick your stock and make sure you don't have more than two positions. If you have three, then it's enough. But two, sometimes we get carried away and then we keep buying this uh, in one sector because it, everything technically in that sector or technically in that industry group is looking good during the day. So all we see is those stocks which are in the oil, and then we don't think that this is the oil stock. So when the oil pulled back, they all go down. So consider it as a one position. If you have three position in, so if you have three position in the oil sector and you invest 33% of your portfolio, so actually you are investing 100% in one sector. So either you will wipe out your position or you will double. So when you double the portfolio, you think you're a genius, and then you will do the same thing and maybe double again, and then eventually you get caught and it's done. So just when you're opening a position and look at the industry group and say, do I have any other many? So I asked my team, do we have any position in oil? And then the answer comes, yes, we have. So which one? Yeah, I see this. Oh, okay, yeah, I better be careful. So I have a position in Chevron. Okay, maybe I shouldn't be buying OXY, or I don't have any position, so I'm going to buy OXY. So what happened? Then it gapped up. So here's a support at 57, and there was a news. I think Warren Buffett is buying OXY. So if Warren Buffett is buying it, doesn't mean we should be buying it because he buys forever. He keeps it forever. We cannot keep it unless you want to buy a stock and just keep it. And Warren Buffett will not tell you that he sold it. You will come to know 1 month later that he sold his position, and then you will go back and look at the chart, and then you say, damn, he was selling right here and we did not know, and I'm still holding it. So if you buy based on Warren Buffett, you have to be Charlie Munger to get the tip. Otherwise, just that he's buying somewhere, he's buying it, and I just get along and I do my thing because he will not tell me when he will exit or buy more. So there's a news and it is gapping up, and I read the news. So I'm not relying based on the news. It's just that the news or whatever. Maybe the news was old, like 1 week old, that Warren Buffett is buying. But I see the gap up. So if the gap up is in OXY and other oil stocks are moving, I can see on my screen. So I position and position via calls. So position via calls, and then I will sell somewhere here in 70 levels. This is the resistance. It's not that tough resistance. So look at this resistance between 67 and 70 in OXY, and look at this resistance in NCLH. There's a big difference between this resistance between 20 and 23, and look at this resistance between 67 and 70. So this is minor resistance. It's not much. So position sell, and boom, it break out. So now a cannonball is fired. Look at the volume. I don't know about this is too much. Sometimes too much volume is also a bad sign that everybody bought out, sell into the volume climax. So this is maybe this is volume. So because we're trading options, so it's breakout happened. So I'm out, breakout into this resistance. So if I am disciplined, I have 44% gain in 5-6 days. The volume is so huge, so I don't. Maybe there's nobody left to buy. Maybe they're following Warren Buffett, and they will hold for it forever. Maybe 100 level, 200 level. I don't know. Maybe you can buy shares and hold it forever. But if you're trading option and you position here on the gap, and here is the exit into the resistance level. So your target hit. So whatever is the option price at that time, I don't know. People say, okay, you send the alert. Now tell me what's the target based on the option. I don't know what you're saying. The target based on the stock. How do I set the target based on the stock? So just maybe you just do the calculation based on the 50% delta. If you bought for 4, maybe you sell it as 6, or maybe you think okay 40% is enough. So option was trading at 44% gain. You can set the conditional order, or you just sell when the target hit, and we send you the alert. So we send the alert right away when the target hits. We get the alert and we send you. So it's instant. So real time target hitting. We know the target is hitting, the first target, second target, third target, and what's the option price and how much gain we have. So everything is it's real time, and the targets are sent to you via email and SMS. Now here's another trade we did on the semiconductor, but inverse. So there are various ways to skin the cat. So the semiconductor, this is a ETF which moves 3 times faster the other way. So uh, August 17th. So there was a sharp move, gap up. So this is pure. Sometimes you have to be the traders who are intuitive. Besides having a technical knowledge or fundamental knowledge, you are intuitive. So the traders who are intuitive, they are the ones who make a lot of money. But the traders, they are not, but they say they are buying it based on intuition, and they use the word, this looks interesting. So if you're buying it based on interesting, and it's most of the time it's not working, so maybe the interesting indicator doesn't work. So just uh, how intuitive you are. So sometimes intuition, and then you based on the previous experience and judgment. So I position myself in SOXS, so it moves against the semiconductor and three times faster. So I send this alert. Chip stock recently moving up. Now they have stalled. Inverse ETF moving up. So what do you think? SOX moving up or down? So position all. And so this is not the current chart. This is the old chart, like 2 days later. SOX is trading somewhere in 41, 42 zone. So it's trading in this area. So SOX is trading in this area. So this gap up with the volume, and then this pullback, fill the gap. So gap up, gap down, fill the gap, but it's still holding support, and then move up third day. And now it's trading in 41 zone. So 41.72 is the close price today. So entry at 37.49, something like that, and it's trading at 42. So $5 move. It's move fast. So $5 move brings some gains in option, and then another $4-5 move tomorrow or on Wednesday will give us some gains. So here are some charts. This is from swing and swing line. So we have swing option service on the website. So I have a basket of about 500 stocks. So mostly 100 I trade. Swing options, I send like almost 1 trade per day, sometimes 2 trades per day. So objective, based on the study, the historical data, the target profit is 40 to 100%. So when it's hit 40%, that's the first alert, 40%, 50%. And then when it reaches extreme, like 80 to 100%, then we sell majority based on what we know that 80 to 100% is the extreme. Sometimes it goes 300, 400, but that's extreme. So for in option, if you are trading 70, 80% is very good. We send you exact buy price. So at the time, right at there, we don't say, like you say, okay, I never see that price. I don't know what this guy is talking about. What I do, I send you, if the spread is a little wider, then I send you the mid price. So if 650 is the bid and 7 is the ask, I'm watching, and I say, okay, we can buy at 680, because I know if the stock pull back a little bit, 680 will be filled. So that's the exact buy price. I don't send you the story. The story comes later with the chart and everything. So I then don't tell you the story to read and RSI this, stock exchange. You're not in the business to read the story. You can read the story yourself on the internet. So I don't sell you the story, just quick subject line on your SMS, and you buy it, and then I send you 3 targets, and then we monitor the target. When the targets are hitting, we are telling you what to do. And at the time the target is hitting, we know the option price, how much gain. Sometimes what happens is this. And people need to know, let's say we send the target, the first target is hitting, and it hit after 5 days. Now the option is only making like 10% gain, or is trading at break even, or trading at a loss, even though the first target is hitting. So we know that. So I revise the target upward because I know the first target hit, but there's no money. So then you will say, if you're trading a stock, then you're making money, but if or you have sold the puts, etc. But if you're trading calls and if it hit the target after 5 days, the first target, which is closer, there's a 95% probability of hitting it, and you're not. So we know. So send you the revised target. So we revise. We make the second target as first, third as second, and then we come up with the third target. If there is a target, we don't force it. Otherwise, we just say, okay, we hold it, and we will sell at the second or third target. So the targets are constantly monitored and communicated. Ideal holding time is 7, but it doesn't happen all the time that we close between 1 and 7. Some trades are open for 14 days, and some extreme level 28 days. So I'm working on a time stop. So I'll be sending you the time stop. So if it 20 days gone by or 25, and if technically also not good, then I'll send you the alert. So we are working on that. We send you alert via email, SMS, constantly provide you the update. And I have written 71-page guidebook, which I'm in the process of reviewing it, and I teach you like this, small topics. Last time I taught for 2 hours and it was too much. So for this swing, you need 15,000 at least in your portfolio, and it's active. You need to be active. You need to have access. I have members who are surgeon and that they are doctors and they are CEOs, but they have a phone in their pocket. So they may not be buying it right away when they're performing surgery, but they know the alert is there and they can do it later. So this is what the swing option service. I will show you something about the market. So just a second. I'm sharing my screen for the market. So when you see the screen, let me know. So you guys see my screen. So about the market. So for last 10, 12 years, I've been constantly working on the market because the 80%, like 80% success in showing up, 80% of your success is in showing up. So 80% of your success is knowing the market. So market can go up, market can go down. Right now, so I have a, you can say algorithm. It's a computerized. So I feed the data for 4 markets, and I get at the other end of the machine, the black box, I get the result every night. So feed the data, do the analysis, then I look at it, and then comes the result. So the result is the minor trend, intermediate, major trend. So when we get the signal, the market moves significantly. It can come down. Like right now, on Friday we have a minor trend as a downtrend signal, but it doesn't. It's a minor, unless we get a signal at the intermediate level. Uh, uh, the long positions are fine. So right now we have a downtrend in the minor trend, an intermediate uptrend, and a confirm uptrend on 1st of August. We got the signal on the intermediate trend on 27th of July. So we have this service. You can sign up for on the website, or when you get a special offer in your email, you can sign. So not only this trend, we also calculate the market strength. So market strength was nice, all green. On Friday, the market strength has turned into neutral. So this is one concern for the market, because the needle is yellow now in the middle. So the needle should not come to the red zone, and intermediate trend should not turn into downtrend. So if intermediate trend turn into downtrend and this needle goes, the strength of the market goes on the red side, then the market is trouble from the long side. And it doesn't whipsaw. It's not like, okay, you said it's downtrend and it's strength. So it stays for a while. So I'm not saying um, that not to worry about. So intermediate trend needs to turn down. So and the needle needs to go on the left side, on the red side. So far it's good. Volatility level. So there's another thing we need to watch and people don't watch is volatility level. So the bull market, the bullish market, the volatility level is categorized into two categories, the normal and the quiet. So the most bullish market, like during the Trump days, the volatility was in the blue level, so quiet. So the most money you make is when the market is green and it's quiet. So it's like quiet, quiet, quiet. Market is moving up every day. It moves a little bit up. Then the next day it comes down, but not much. Then it moves up. So overall, the market is just chugging along, moving up. Traders are happy. Everybody's happy, and it's in the blue zone. Right now, it's in the green zone, which is good. So, so this is what the market does. We have a service. Now, this is all good. Okay, you can say, yeah, this is all good. But then what are the support levels and what are the resistance levels? So we can anticipate where the market can stall. So, so how we do that? We need, again, technical analysis. I did not put the levels of support and resistance. Next time I'll try to do that. But so right now, so how you no, the market can turn. So you can analyze the overbought, oversold area. So the market was overbought last week. So that's why it's pulling back. It's just overbought, and now it's traders are taking profit. You can identify the support levels. So so once the market hit the overbought level and it's coming down, and the minor trend is negative downtrend, so then you start you have to analyze how far it can go. So support, identify the support levels, and then once you identify the support, then the degree of the strength of the support levels, whether you are identifying it on a weekly chart or a monthly chart. So identify those, and then you know that okay, the market can pull back at this level, and then you're looking also at the intermediate trend and the strength of the market. So all this is going on in the analysis which I do. You can take help from the trend line, but the trend lines are just trend line. So you can draw a trend line 10,000 ways. I can draw a trend line in one way. I say, okay, here is the line. You see that in the market. So the trend line is a lagging indicator. So it can hold, market can hold the trend line support, may not hold. It can just break other side. Now, one way of anticipating the turn, this may sound like a magic or some voodoo, but there is a way to anticipate the turning points in the market, which is done by analyzing. I know it will sound crazy to you, but there are some mathematical formulas, and there are some studies done based on the stars. Like yesterday, I went. So I believe so I believe in the heavenly bodies all above. So here I live in the LA area, so I take my children to Griffith Observatory. So last night I was there, yesterday whole day I was there, and I take them every time I learn something myself, and they have a show in the planetarium, and so I am fascinated by what's up above there. So all those planets, they are having an effect on our life, including the market. So the experts have done some work, and they tell you that based on the studies like Jupiter, Saturn, and all the titanium and platinum, whatever, sun, moon, and earth, and whatnot. So they can tell you, they tell you that okay, this is the turning point. This is the date. Expect this date for the market. Now, if it happens, then if the market turns, then they say, okay, didn't I tell you August 24th, the market will turn. See, it did. And if it doesn't, then they just keep quiet. So I'm not saying this work all the time, but there is a way, there is something you can, if you know the date, and then you say, okay, I know the date. Now what else is happening? So one thing which I noticed is the major event about to occur in leading into the day. So let's say I say, okay, August 24th, based on my mathematical calculation, August 24th is the day where the market can turn. So market can turn which direction? It is because it's called turn. It's called turn. So whatever the market is doing, leading to that date, the market can turn. So what the market is doing right now, the market is coming down. So if the market is coming down and you're reaching that climax date, the market is expected to move up. So this is just something you need to, as a trader, we need to be aware of that. Okay, the market was overbought. This is the support level. Today is what, August 22. There is a major event coming up. So then once you know the date, because the date can be calculated 1 year in advance, but then you say, okay, what is the event coming? Is there an event? So I was talking to my friend and he said Jackson Hole event coming between 25 and 27. So when the major event is coming, market is declining and a major event about to occur. So it looks like a contrarian view. That's where the traders make money. So contrarian view, the market is declining. I calculate the date of August 24th, and there's a major event coming on August 25. Maybe at the night of August 24th, the futures will be green. So the Dow Jones future, Nasdaq, etc., will turn green. So and then on 25th, market turn around and move up. And at the same time, so there are multiple things happening. Event is coming up, market reached some oversold area, some support level, and there's a date already known. So this is one of the way to prepare yourself. So I use stock chart and I trade. I trade on TradeStation. So you can have any platform you want. So you can use any platform as long as you can plug in and have the chart which I'm showing. So JWN and M have earnings tomorrow. So maybe JWN, we don't have M, but maybe JWN goes down. So when the market is getting clobbered before the turning date or before the event, most of the time, the majority, the market will, the tide will shift. So I'm not saying that I know 100%, but something can happen on 24th. So no, so this is a question. Do you, when you receive the text message to buy, do you tell me how many contracts to buy? So think about this question. This person is asking, and I received this message. People ask me, you gave me the message to buy at this price, but you are not telling me how many contracts I need to buy. So how I know what contract you need to buy? Just tell me. I don't know if you have $1 million portfolio or a $1,000 portfolio. So I cannot. For you, that's why you have to do some the calculation on the Excel worksheet or on your calculator and figure it out how much you need to, how many contracts you need to buy. So this is another area. This is a complete one area. How much or how many? So how many and how much is a complete different area to master. So with this, I created another presentation, but I think it's too long now. So I will hold that presentation for next, and I will show you. I created a matrix which is a three-dimensional, and I'll show you what the traders do. You will see when you see the matrix. So I will hold it again this on next Monday or Sunday. So you will be notified either Sunday or Monday. That's my day to do these things. And I hold 1 year coaching. I know Larry. So this was held on Tuesday. All right. So I conclude here, and I will see you next Monday or Sunday with another topic which I have prepared, and I will show you. So please come and learn something. Okay. Just a second, and there's another question. When the trade email comes, the price will be so much different. So in that case, do we have to wait to settle the price? Do we have to immediately market price? No. We don't buy in the market price. So buying at the market price or selling at market price is like, okay, you are at the mercy of the market maker. You only sell at the market price when you just want to get out, either at a very high profit you have and you just don't care. You say, okay, I have made too much money, now I need to get out, and the market price. And you may get bad fill, so set the sell order at the limit price in between the ask and bid. If you don't get fill, let's say you say, okay, it was I'm not getting fill at 30-second pass, 1 minute pass, and you are desperate to move. When you are desperate, you don't care about the price, you get out. So at that market price. When you are buying, you're not buying at the market price. So I have written a section called to chase or not to chase. So maybe you pay a little bit if the suggested price is 620 and you say, okay, it's not trading at 620. I'm not getting till 620. Maybe you buy at 640, but you say, okay, because he said 620 and it's at 640, so 20, maybe I buy two contracts and I plan to buy five, but I just buy two right now. And but then the rest of the three contracts you will not buy at 620, you would set at 580 or something. So you have to decide at that time. So it's hardly a case where the price just slip away and you don't get filled. So I'm not a Momo trader. I'm a technical trader. So I'm not sending you something which just moving and you are is getting away. And I'm not the one where I position myself in advance and then I'm sending you the alert to buy and I'm getting out when you are buying it. So I don't do any of those things. All right. So okay, so yeah, so I have sent you the email, Chan, so you will receive the discovery session and then we can talk. Uh, no, the profit expectation between swing option and swing light is same. It's just that, so there's a difference here. For swing option, you need a bigger because of portfolio size because I send more trades in swing option than swing light, and the swing option have a higher price option than swing light. And another thing, in the swing option, because I know the portfolio size, so I send two threes, two strike, one strike in the money call. But if the trade is looking so good, and I know if this one strike or two strike in the money is too much for swing light, then I'm sending maybe one strike in the money in the swing light, or maybe at the money or slightly out of the money. If I know that still we will make money, even though we are going one strike out of the money, not far, but just a little bit. So if the market moves faster, then the out of the money will make you more money percentage wise. It will make you more. Ideally, I want to buy one or two strike in the middle. So I try to filter the trades between swing and swing light. All right. So profit expectation is same. So it's not different. So thank you, and I'll see you next Sunday or Monday. Thank you.